Hello, and welcome back to Top 10s You Should Know. Let's be honest. The word recession can make anyone's heart sink. It's that uncertain time when people tighten their belts, businesses shrink, and fear whispers that maybe this isn't the right time to invest. But here's the truth. Recessions don't just destroy wealth, they transfer it. While many panic and pull back, the calm and prepared quietly plant seeds that grow into fortunes later. Every economic storm has hidden opportunities, but only for those who know where to look. So today, we're breaking down the top 10 investments to make in a recession, the kinds that not only protect your money, but help it thrive when the dust settles. Let's get started. 1. Invest in yourself. The skill multiplier. The smartest investment during a recession isn't a stock or a property, it's you. Recessions reveal a hard truth. Job security is fragile, but skill security is forever. Use this time to upgrade your skills, take affordable online courses, or learn high-demand abilities that make you recession-proof. Maybe it's coding, data analytics, communication, or even a trade like electrical work, anything that boosts your value in the market. Think of it like sharpening your sword before battle. When companies start cutting costs, the skilled stay standing. And when recovery begins, they're first in line for promotions or opportunities. Remember, education doesn't end after school, it compounds. 2. Dividend-paying stocks. Earning while you wait. When markets crash, prices drop, but strong, established companies still keep paying dividends. These are your cash flow stocks. They reward patience with consistent income even while the economy slows down. Focus on industries that remain steady. Consumer goods, utilities, healthcare, sectors that people still rely on no matter what. Dividends act like tiny paychecks that cushion volatility. Reinvest them to buy more shares while prices are low, and when the market rebounds, you'll own far more. The trick is to look for sustainable dividends, not just high ones. Stability beats excitement every time in a recession. 3. U.S. Treasury bonds, safety that pays. In a recession, people crave safety, and nothing feels safer than government-backed bonds. Treasury bonds are like parking your money in the world's most reliable vault. They don't offer high returns, but they protect your principal and provide fixed income. Think of them as the calm in the financial storm, your safety anchor while riskier assets swing wildly. Having some bonds balances your portfolio, letting you sleep at night knowing part of your money isn't tied to stock market chaos. It's not glamorous, but in times of fear, boring is beautiful. 4. Precious metals. The timeless hedge gold and silver have been safe havens for centuries because they don't rely on company profits or government promises. When currencies weaken and inflation rises, metals hold their value, sometimes even climb. You don't need to fill your safe with gold bars. ETFs or digital gold accounts make it accessible. The idea isn't to bet everything on metals, but to balance your portfolio with something real, something that can't go bankrupt. In uncertain times, people trust what they can touch. 5. Index funds, the long game. Recessions make stocks cheap, and index funds let you buy everything at a discount. Instead of guessing which company will survive, you buy the entire market through a low-cost fund like the S&P 500. Historically, every major crash has eventually been followed by a recovery, and those who kept investing came out stronger. Think of it like buying the whole economy on sale. The key is patience. Ignore the noise, invest consistently, and remember, wealth isn't built by timing the market, but by time in the market. 6. Real estate in strong locations. Recession doesn't mean stop buying property. It means buy smart. Prices often drop when fear rises, creating openings for buyers with patience and good research. Focus on essential areas, cities with jobs, universities, and stable demand. Rent might become more appealing than buying for many, so rental properties can provide steady cash flow. Even if values dip short-term, the long-term gain and monthly rent can make up for it. The rule is simple. Don't over-leverage, buy below market value, and focus on stability over speculation. 7. High-quality corporate bonds. These are bonds from financially strong companies, not risky startups, but big names with history and credibility. During recessions, these firms cut costs, but they rarely default. Buying their bonds gives you predictable income with slightly higher returns than government bonds. It's like lending to responsible adults in a risky neighborhood. They're not flashy, but they pay you back on time. 8. Emergency fund. The unsung hero. Sometimes the best investment isn't about multiplying money. It's about protecting yourself when everything else falls apart. In a recession, uncertainty becomes the norm. Jobs vanish overnight, bills don't wait, and life can flip upside down in a moment. That's why your emergency fund isn't just a savings account. It's your safety net, your emotional shield, your quiet confidence when everyone else is panicking. Most financial experts recommend having at least 6 to 12 months of essential expenses saved. But even starting small, one paycheck at a time, matters more than you think. It's not just about having cash, it's about having choices. When you have that cushion, you don't have to sell your investments at a loss, borrow in desperation, or depend on credit cards that trap you in interest. It gives you breathing room to think, to plan, and to recover gracefully instead of reacting in fear. 9. Recession-proof side businesses. If a recession teaches us one thing, it's that relying on one income stream is like standing on one leg. Eventually, you'll lose balance. A smart move in tough times is building a small, recession-resistant side business that solves real needs. Think of services people still use no matter what: repairs, food delivery, tutoring, content creation, or digital freelancing. You don't need to quit your job or have huge capital. Start with what you know, what you're good at, or what you can learn quickly. The beauty of the digital age is that you can build from your living room, whether it's offering skills online, selling handmade crafts, or helping local businesses go digital. Recessions also create unique gaps. When companies cut costs, they outsource tasks to freelancers. That's your door. A side hustle isn't just income, it's empowerment. It's knowing you have a backup engine even if your main one stalls. Many successful entrepreneurs you admire today started in downturns, not because they had it easy, but because scarcity forced creativity. 10. Invest in relationships and networks. Money flows where trust lives, and that's why your relationships might be the most underrated investment of all. In recessions, when businesses close and job markets shrink, opportunities often come not from job boards, but from people. Mentors, old colleagues, friends who remember your work ethic, or clients who trust your name. Networking isn't about collecting contacts. It's about building real connections. Call that friend you haven't talked to in years. Join online communities where professionals help each other. Offer value first. Share your knowledge. Help someone land a gig. Volunteer your time. And you'll be remembered when opportunity knocks. So tell us, which of these investments do you believe is most powerful during tough times? Let us know in the comments below. And don't forget to like, share, and subscribe to Top 10s You Should Know for more smart money insights that help you thrive, not just survive, in any economy.